Alright guys, I'm back. I don't know what happened to the other one. It keeps reconnecting, disconnecting. I have no idea. So hopefully this one is going to stay put. But let me check real quick. Alright, so it seems like I'm live. I'll wait a couple of minutes to wait to see if anybody rejoining. Now, well, since most of you are gonna rewatch this live stream, I'm just gonna go straight to what we're gonna cover today. Of course, we're gonna go to the price actions and everything, right, of GameStop, right? We just have a, hold on, actually, second thought. Let me, put some music on here because I need to do something real quick before I go into that. What should we listen to? Let's see. How about this one? Not feeling it. Not feeling it. Ooh, dark and mysterious. Nope. What's this? Bright and shiny. Okay, so let's enjoy this one and I'll be right back.
Love the chase and the hunt, and I set the pace when I'm running. I always take what I want and I always give it 100. Don't need a bank, no I'm funded. Play the game like it's nothing. I'm always thankful for something. Don't take for granted, stay humble. Now wake up! It's time to look at the enemy. Look in the mirror if he is no friend to me. It's not working out, maybe it's the chemistry. It's time to break up so I can make a better me. Better believe in your mind, cause it's everything. You can mold, shape, find almost anything. All it takes is some time and some clarity to find your identity. It's mind over everything. And when I feel aftermath. When I hate, I attack. When I feel like this, I'm immortal. When I feel like this, I'm immortal. And when I feel like this, I'm immortal. 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 Don't stop. Just level up, don't stop.
All right. We are back. Hi, Lynn. Thank you so much. Where's the beats? Yes, I love that song, by the way. So I'm just gonna use it from now on. So yeah, when you feel like this, you're gonna be immortal. Okay. So the reason why I like it is kind of like fitting for GameStop too, right? GameStop is immoral. Okay, like you can't defeat GameStop. Okay. Now, of course, we have earnings. So we beat, well, not every expectation, but we beat earnings, right? It's ridiculous to say that this company is somehow terrible company to invest, but time and time again, they beat the line that is matter most, which is earning per shares, right? And, I don't know where, Lionel, are you here? Anyway, Lionel and I was like talking about it earlier, how like amazing it is. It's almost like GameStop. Like if you were to think about GameStop as a marathon runner, right? And you compete against every single one, marathon. Yeah, some people finish in first place or whatever. But it's almost as if, as a runner, GameStop cut their legs off, maybe one, maybe two, I don't know, whichever you feel like. But it's I know, I mean, I'm terrible at making a point, but stick with me. I'm excited about the prospect of GameStop. So it's as if GameStop cut its leg off, or cut the leg off, and still win the marathon, because look at this. So we have the numbers out, right? And we did miss $100 million, $100 million, just about there, but we're still beating on earnings. So what does that tell you? It tells you that even with the miss of $100 million in earnings, we are still close, to profitability. And so, I mean, again, it's almost like they're cutting their leg off and still finish number 2, so to speak, right? Not quite like number 1 yet, but just we're trying to stay humbled here. I'm trying to stay humble. I'm trying to stay level-headed, not too hyped up or anything like that. But the number is very, very good. And for people who are trying to say it otherwise, like the news media out there, and I'm sure, they're coming out of the woodwork at the moment to try to like, oh, it's not actually a good earnings and all that stuff, right? It's like, oh, they should be doing more or whatever. But I'll react to those video later on. But currently, I'm just going to go through a couple of things. Now, before, let's go through price action since it's the first thing that you see there. Of course, today it was a surprise. I did did I really expect this? Now, I thought they were going to try to, kind of kill the momentum right here and kind of do that one where they would draw out, the drop so quickly to the point where it's like scaring people off, right? And usually it's just trader in and out of stock the same day, and they're trying to win the quick buck right here. option traders as well. If you're buying calls and versus put and all that stuff, that's also influence the price action of something, right? We've heard about we've heard about max pain and stuff like that, and you're going to be able to kind of guess where the price going to end up at based on the max pain level, right? Max pain is just a level of which market makers use to deliver the max pain to retail investor, meaning whatever the level is, they make the most money, and retail usually lose, right? So that's what it's essentially mean. But anyway, so on my last live stream, I did point out this gap fill right here, and it seems like today it hits just there. It's amazing how the gap gets to feel, eventually. So if you want to see that gap, it's probably the daily candle. See right here, that gap, it seems like 90% at a time. It gets filled at some later date, anytime that's happening. So it bounced off and it bounced off to the race, right? So currently, if you look at the volume, look at it. 19 million shares being traded back and forth. 19, you guys, this is nothing. This volume is nothing, nada, right? You don't see this type of movement with the 19 shares, okay, of 19 shares being traded back and forth again. And then you see this type of price action, right? So perhaps they're ready to close out some position here today, slowly, so that, they don't freak anybody out. But it's, is this the beginning? I don't know. I was telling Lionel earlier, I don't know if this is the last time or last 3 months that you're going to see GameStop under $20. I mean, because up until now, it's a no-brainer because the company is doing better. And quarter 4 is historically the best quarter. GameStop earns a lot more in percentage versus other quarter at the end of the year because Christmas and Black Friday, right? And then going on to January as well. So New Year's and all that stuff. And of course, they're going to try to bring people in to shop at the online and, experiencing those deals that we used to kind of like go crazy with, right? Currently, America's, I think that we're been so jaded with all of those deals that tells you that there are deals, but they're not really deals at all. So I'm hoping GameStop's going to bring that back where if they say you're going to have deal, that you are going to, that deal is actually a real deal. For those of you who doesn't know what I'm talking about, I better show what I'm talking about here. So what I meant is that, when they have this type of deal, it's actually the discount that you deserve to get, it's not fake discount or, overinflated the price in order to get you to think that, it's actually used to cost $100 million, but now you only paid $12 for it, right? So in other organizations, they would do that, or in other stores like Target and all that stuff. You've seen those videos before where, the deal of Black Friday is the same as any other sales whatsoever. And of course, Amazon does the same thing. When you see those, 50% off, it's actually the historical price of that particular item has always been the same price. Never change. So, yeah. And this is the value that I think GameStop is providing for shoppers who, gamers and all that stuff. But let's go back to the price action. So yeah, it bounced off of that particular gap fill right there, and it's off to the races. Now, where's the next price action? I don't know, but I hope you don't, use this analysis to do any trading whatsoever. Not a professional here. I'm just an amateur, all right? Everything I know is through Googling things, remember. Okay, so when you kind of set a bull flag or whatever, you see, I don't even know the term. Okay, so don't listen to me. Just enjoy the ride. Just enjoy it. Okay, 1 second. Sorry, I play too much today. I'm in a good mood, you guys. Okay. All right. So, what my thought is that let's see. It might bounce off of this support level right here. Oh, it's already did over here. So it could fake people out again and then slowly break that trend line right there. But if you were to draw it in a different way, okay, let me draw it to a different way. This could be a bull flag pattern too, right? And this is what it is. Usually this is the handle of the flag. Kind of long drawn out one too, but if somehow it's gonna broke off tomorrow, it's gonna do that as well. So there's a possibility that it's gonna do that, or it's just gonna be ping-ponging. Let me change the color real quick. Where's the little thingy I join? I'll just do a highlight. But anyway, so it could just ping-ponging in that channel and slowly going down again. But I don't know. Again, like, is this going to be the last time that you could see GameStop at 16 something, right? 1636 right there at the closing. It went down a little bit after hours, obviously, but Robinhood actually do a 24 hours market with GameStop. I don't have that on right now, but if you have Robinhood app, you could see it right then. Last I checked, it was like around 1590 or something like that. So it might be up now, but I haven't looked at it yet. So it doesn't really matter what the price action is doing. I'm just doing this for fun, you guys. But as a long-term investor, we know what this company could bring to the world, so to speak, right? I think it's. I try not to overhype GameStop too much because again, you have to stay grounded in the reality of things, and so that you could see the number, how it actually is. So there's no fluff, there's nothing like that, and the fact that there's no earnings call too, the fact that Ryan Cohen doesn't speak and all that stuff speaks volume as well, because he's not about to just waste 15 minutes of his time to do that when you could just look at the balance sheet yourself. That's it. That's all you need. I don't care if he comes out here and wave his hand up and down saying, oh, we're being profitable, we're gonna do amazing thing. I don't care about that at all, right? And all I care is just the number right here, and we did amazing. Hi Jay, howdy, what's up? G-America is an I can't even say that term. Inevitable. Yes. Now G-America, I'm not familiar with the concept, but I've heard of it since the beginning of these things. There's anything new development that you know of, Jay, about G-America that you could tell us about on the chat right there? But anyway, thank you for joining. So let's go to the next point I want to bring up here. For GameStop, there's a lot of I think promotion, right, on their on their X page. And to me, this is just a testament of what GameStop is going to kind of try to do, right? Or at least going to succeed in at the very least keep engagement up by, showing all this all these reward shows that are live, and they're updating it as they go 20 seconds ago, and they're trying to show engagement on those type of things, and so that you get more people excited about the gaming industry, or what game, or it's just a research for them, what game does people really like, right? To play and all that stuff. And it just goes to show that the leadership is doing everything they can to advertise with less money, but more effective than spending millions of dollars on app that doesn't really matter, right? Or on Super Bowl ads or something like that, or on Nicole Kidman, if you don't know that reference, good luck to you. No, I'm referencing Adam Aaron spending money for Nicole Kidman's ad to do ads for AMC. So, GameStop doesn't waste money on stuff like that, but this type of thing really show me that they are engaging in the right marketing, so to speak, right? So they're updating live on what is winning and all that stuff. So all of these games are being, and I bet you anything they're gonna promote it on their website to be the next promotion for Christmas and all that stuff, bundles, like the top, winning game or something like that, bundle, and stuff like that. It's really good for the company, like to engage people to come in to shop. It's like, it's new, it's brand new, and it's just give people a little bit more value, even though it's just it's like a small little things that, you actually show the gamers or people who are playing games that GameStop actually care about what they are like, what they like, as a gamer and all that stuff. And not only that, it just bring people more traffic to the store, to the e-commerce aspect of things, right? You could technically click on the page and then go to GameStop directly there. You don't really need to wait in line or anything like that in the store. But for those people who like to shop at the store, you could do that too. So that's another good thing about GameStop. But yeah. All right, Jay. Jamaica Enterprise Holding Inc. Oh, credit union? Really? Jamaica Credit Union? We are the hedge fund now. Oh, yeah, that terms, I don't know. I'm not very familiar with that, but that sounds amazing to me. Now, hedge fund, the term hedge fund is kind of like a bad rap already, or bad reputation. So I don't know, maybe they're going to try to twist it in a negative way. I'm talking about the media, obviously. They're going to try to twist anything to be negative. We went from losing $95 million last third quarter to this one only losing $3 million and gaining $15 million in free cash flow, bringing us to a total of now up to $1.2 billion cash on hand. Yes. No longer no long-term, I think no long-term major debt. This means technically we are profitable of 20. Oh no, sorry, my glasses. $12 million on the quarter if you know how to read the balance sheets. Oh, okay. Do you think we add anything to the marketable security? I wasn't even looking at that. I saw like $300,000 and $500,000 or something. It's like 300.5. That's what I saw. So it's either, but I have to read more into that. Have loaded up on extra inventory of on the holiday. That makes sense. Yeah, I did predict that too, or it makes sense because of the. We can have already shown that. Then we know the next big holiday, fourth quarter of this year, will be the big profitable. Yes, will be big profit. Big profit. Big profit. I think you meant to say. Yes, thank you, Jay, for that one. I did know that inventory is going to be big, bigger than usual, but it seems like stockanalyst.com or whatever, this website that I always use, has updated the recent trailing 12 net income for this fiscal year. No, I mean for this fourth quarter so far being reported, and it looks like we're only down $8.2 million so far, right? And oh man, it's so next year, if that's the case, I wonder. Hold on, let me look at it. Let's take a look at it together. Okay, so let's look at the new updated stats here. So the ownership, inside ownership is still around 12, whatever, but I feel like this is not even updated. I thought Ryan Cohen owned at least 13% of the company. Maybe the portion that is in his hedge fund, Ryan Cohen, what is it? His hedge fund? No. Venture. RC Venture is not accounted for that. I don't know. So I have to take a look at that. But as far as floating, the float of the company itself is 267. So it's even lower than 305 that I usually use to calculate, on my own anyway. I didn't show that. Oh, right here. The whole total outstanding, including the inside ownership too. Yes. Ooh. Okay, I'll read your comment later, Jay. So let me go through this first. Okay. So it looks like, well, this one hasn't been updated yet, perhaps because it's still negative, but we'll see how that goes. But as far as price to sell, even lower. Remember, price to sell is a commonly used valuation metric, okay? Now I forgot what is the good one is, the good number for price to sell ratio. So price to sell, what is a good price to sell ratio? It is between 1 to 2. Price to sell ratio with a value less than 1 is better. Okay? So it's even better than it has ever been. Okay? Less than 1. Book value still at 4, close to 4, 3.95 there. It's ridiculous, right? So book value, okay, let's see what is good. What is good book value ratio? Good versus bad. So under 1 is considered desirable for value investor. Okay, well, at least it's above 1. So that means, okay, so however, some value investor may often consider stock with a less stringent book to value, price to book value less than 3. So if it's less than 3, okay, I guess it's a little bit overvalued for some value investor out there. I don't know by much, but that's just what it says here on Google, on the Google. PEG ratio is below 1. Of course, that's better. I think between 1 or 3 or something, it's a good one, but even less than 1 is even better than that. Current ratio 1.6. Quick ratio, why is it up like that? I don't like that. So wait, hold on. Quick ratio. So does that mean, oh, sorry, I misread this. So if it's less than 1, it's better because you have more cash. No, hold on. Am I doing this wrong? So bigger number. So current liability is higher than cash on hand? What? I need to verify that because that seems sus. It should be above 1. Debt to equity ratio went down by 1% right there. It used to be 50. Debt to cash flow, it used to be 17, but now it's 6.4. Interest coverage, why is it come down? It used to be close to 5. So there might be some discrepancy there. Kind of sus to me too. But maybe I'm misanalyzing this myself. Looks like profit per employee has come down. It used to be $6,000 minus. That's good. CapEx year on year or trailing 12 has been $30 million right there. Income tax effectively non-existent because they don't actually make any money yet, or at least they're showing loss. And then the profit margin is closer to the positive, okay? Profit margin on the gross end, when you account for 12 months, is 24. Again, this is just a number that I see here, but this should gone higher. Interest coverage. What is good interest coverage here? Good range. Okay, interest coverage ratio, good range. So less than 2, while 3 is more preferable. So yeah, it used to be a lot more, didn't it? Net income, 8 million there. And of course, I think adjusted for EBITDA. For this quarter, though, it was up 5 million. But if you were to account for the whole year, it's the 2.6 million. Now, this one, I had a video. I don't know if I deleted that live stream because it was like with my rants or something. But I'll show it later. But EBITDA, it's kind of like misconstrued here. What you want to do is always account for this one because it's like depreciation and amortization. So that's not a real earnings, so to speak, because it's actually saying that they lose less than they actually are. See what I mean? So the best one to go by is the earnings before income and interest, or interest and tax. That's probably a better metric to go by. So we're still down, still, $43 million down there. Okay. And this score, for some reason now it's NA for some reason. Working capital, close to $1 billion still. Of course, net cash is still close to the same thing. Total debt, this is like current liability, I think. And then, still have close to the same amount of cash there. Positive operating cash flow, 126 right there. Woo! And then free cash flow of $95 million year on year already. So that's not accounting for the fourth quarter. So we're going up there. We're getting there. So let's do the trailing 12 here. So far we're down to we kind of miss $100 million on the top line revenue there. But it's okay, I guess, if you get to keep more money, so to speak. $10 million difference versus $100 million different up there. That's nothing, again, like per, if you were to account for the percentage wise. Okay, let me read what Jay is looking there. Okay, let me go up. Okay. Have loaded up an extra inventory. I think I read that one already. So that we then make us overall profitable for the whole year. We'll no longer have a cash burn with free cash flow, no long-term debt. Yep, $1.2 billion saved. Yes. Climbing. Oh, am I reading this right? We will be exponentially growing from here on out. Year on out, you mean? Year over year. Sorry, I'm reading like a first grader right here. Sorry, the monitor is like very far away from me right now. So GameStop Corporation or corporate, we only lose 1 cent per share with this quarter and beat their estimate of negative 9 cents by 8 cents, improved up 30 cents from last year. Yes. Okay. Stock should be up really big right now, but they are totally we are totally inevitable. TikTok. Okay. GameStop won't stop. 24 hours. Okay, so on the 24 hours, it's $15.99 right now. That's cool. I'm sure they're gonna try to either smack it down or run it up and then gap down tomorrow. That's just my prediction. But I'm so used to seeing GameStop, kind of like drop like an elevator. It's like stair set up and then drop like an elevator. Just like after earnings, right? And they do this to scare people off, obviously, the people who are trading that and thinking that they're gonna, one up the algo and all that stuff. And people who trade lose so much money because how can you trade against the quantum computer? It makes no sense. So the only way that you will win is to find companies like GameStop, follow it, and see where the real value is, and then just invest in it in the long term, right? Warren Buffett always says, if you don't own shares for 10 years on end, you have no business in owning that share at all. Okay, so this is a trailing 12. Sorry, I'm just babbling here. So it looks like, oh man, from so $90 million swing right there. That's good. 3 cents here. I don't know why the calculation is a little bit higher there. Free cash flow again. So from okay, so this is okay. If you were to compare last year to this year, right? That's like the difference between $40 million difference, right? No, that's the quarter one. No, this is quarter 1, 2, 3. Okay, this is the 4. So this is the year that I should compare it to. Sorry. So from this to this, look at that. That's $500 swing, no? Huh? I think it's a $500 million swing right there. From negative $40 million to positive close to $100 million. I think that's pretty good. I mean, if you just look at the number, you would say that's an improvement at the very least, right? I mean, what failure person could do this? You know, to say that Ryan Cohen is a failure too. That's ridiculous. Okay. Jay, 1 cent up. Yes. That's funny. Okay. So yeah, gross profit margin went up again, you know, ever so slightly. It's not, you know, the end of the world here and, you know, face melting type of run, but, you know, the fact that it's becoming profitable, we've come a long way. We've come a long way, to say the least. So let's look at the balance sheets right here. Obviously, we have 1 point. The cash position went a little bit up right there. Yeah, maybe $20 million. Up. Inventory from quarter to quarter right here went up by to $1 billion right there. If you would compare to last year right there, went down a little bit in inventory. I think the reason why they went down, perhaps they figure it out. Oh, okay, we didn't sell that much last year, so let's kind of not have it in stock too much to kind of, you know, it makes no sense to buy more stuff when you can't sell it. So, okay, I'm comparing year over year, you guys, sorry. I'm sure, you know, Morantz did a better job at it anyway, so go watch him. Okay, so total asset right here went down a little bit there. I wonder why, but I think it's because of the inventory. I bet you anything it's the difference between the inventory and such. No long-term debt. Well, current debt, it's just a short-term debt, right? Meaning that it has to be paid off within a year. Long-term debt right here. Again, this is a trailing 12. So if the number is different from what you see on the balance sheet, you could go ahead and watch Morantz, and the balance sheets is right there. And I could link it down below if you want. If just off chance somebody who hates on GameStop, still skeptical about GameStop being profitable, and, you know, even though they post quote unquote loss of $3 million, it's still like, oh my God, they're burning cash left and right. Like, really? Same narrative, right? But anyway, so, ooh, 0? Returning loss is 0? Whoa. So does that mean we have, like in one quarter, we wipe this out? Jay, what do you think? I know what's up. Jay, if you're still in here, can you explain this to me real quick? I know you seem so knowledgeable about this, but what I'm seeing here is that from quarter to quarter, they're actually wiping off of this negative, unless this is not accurate. It should be 275. I feel like. Oh, it's okay. You could rewatch it back. No, you don't miss much. Trust me, you don't miss much. It's the same thing that we'll talk about anyway. But yeah, so that's that. It looks like everything, depreciation right here went down year on year. Inventory up, of course, that makes sense. So cash flow. Right now we are net $8 million right there. Operating cash flow went, it's still positive cash flow. That's good. Capital expenditure down close to 10 million there. They're spending less, right? Change in investment looks like that's the same from last year. They didn't add anything to marketable security, or did they? Why is this $500 million? Did they add more? Other investment. Wow. Did they add more, you guys? It's flat. What's flat? I feel like, what is this other investment? Is this another marketable security? Round it off to, oh, okay. Oh, so they rounded up. It's actually like 0. We don't even lose anything, but they rounded up to 1 cent. That's ridiculous. Like, of course, they're skewed to make Gamestop lose more than they actually is, huh? They should round it off to 0 cent, if they're even fair, you know? BS. I'm so... Anyway, I have a good energy today. Good energy. Okay, so we have a net cash flow right here of $55 million in the positive. From quarter to quarter, that's around $90 million swings right there. But if you were to compare to the last year, you guys, last year's, it's $550 million swing right there. So what else are they not doing right? I mean, come on. So free cash flow, obviously, it's turning positive now. So I think this is the. It seems like they're adding more marketable security here. Okay, sorry. Let me double check. Why don't I just go with the SEC website in the first place? It's just, this is terrible live stream, you guys. I'm sorry. You have to sit through all this BS. Okay, I'll be quick. Hold on. Quarter report. Boom. Boom. Okay, so we have, I should have started with this, but there's so many video coming out already, kind of looking into this. I'm looking for, so we're down to $20 million of long-term debt. So if anyone telling you that GameStop has debt, like massive amount of debt, or they don't pay their bill or whatever, right? Don't believe them, because look, $20 million long-term debt. That's it. They could pay that off with just interest alone next year or next quarter even. So, let's see. So shareholder equity went up. I like that. Retaining loss right here. Okay, so this is what I was seeing. So that zero, that one here should be not zero, but $275 million. That makes me mad, because I've been using this metric on this website to report. But I mean, most of the information is accurate, but sometimes, because it's new earnings and all that stuff, they probably couldn't punch in the right columns, or some glitch or something like that. But whatevers. But what's the retaining loss of that much? Can we wipe it out in one quarter, next quarter? Possibly. I think we can. What was the last quarter? Fourth quarter. If you look at this one right here, let's see. How would I go about comprehensive earnings right there? Hold on. So retaining loss of that much. Boom, boom, boom. I think it goes by the net income, huh? Or, sorry, I'm trying to figure out something right here, you guys. I'm sorry. This is the beauty of live stream, you guys. You just have to sit through the pain of me discovering some number that is probably right in front of my face. Cash flow positive, right here. Cash flow. So a cash flow of 800 loss. No, that's cash flow of 400 to that is 500. If you carry these four, 1, 2, 3, 4. I'm a bit confused right here. I think this is a carrying from 12 months. It's a trailing 12. But if you do the annual, probably give you a different number, huh? See, annual, a little bit different, because from quarter 1 to quarter 2, end of quarter 4, that's just how it's reported. Anyway, just know, trust me, they're doing better. Okay, sorry. I'm sorry, you guys. All right, so 12 millions. I mean, we are actually overall positive. Okay. So really, we are positive with that, or flat, but realistically, when you subtract 3 million loss from the 15 million gain in the cash flow, we are actually positive on the quarter of $13 million. But do you think they used that $13 million to buy or hide it somehow? I wonder, or probably just put it in shareholder equity, huh? That's why you see shareholder equity went up a little bit. I think the trick is that he doesn't want to show a gain because that's tax, right? Taxable. Taxable. So that, when you show a loss, you are making money. When you make money, you have to pay tax, right? So I guess to try to eliminate the tax liability, that's why instead of showing the $13 million gain, $12 million, sorry, gain, he would much rather show a $3 million loss. I mean, that makes sense in my head for some reason. But anyway, it really doesn't matter. Really doesn't matter. I don't know, like people who are like against GameStop. It's like, well, who are these people? Look at this lady over here. Doesn't even know what she's talking about. She's, just babbling in the, I'm just kind of picturing all the news media using my video to explain why GameStop investors are like dumb and stuff like that, right? Anyway, it's kind of comical at this point. So if you look at the, all of the news, 8 hours ago, look, GameStop sales decline as it cuts expenses, right? They don't tell you the whole picture here. And people who doesn't read the balance sheet or doesn't care to or don't even know how to read the balance sheets, they're going to just believe in whatever face value the title, right? And it's been working, right, for a long time. I bet you anything, if I just invest in the market, didn't know what's going on back then, I probably believe the same thing. Because you don't want to, you kind of have the cynical way of saying, oh, everything that you hear is wrong. You have to have the ability to, discern which information is correct information. Okay, so let's try. I haven't seen this one. How long is this one? Okay, 2 minutes. So let's see, what are they talking about here?
It is a rough morning for Ryan Cohen. Two of his companies sinking after quarterly results. Take a look here. We're going to start with GameStop, the company.
You see how they start the segment? Oh, it's rough for Ryan Cohen. Two of the company is sinking.
Reporting a loss of a penny per share, revenue of $1.1 billion, falling short of the $1.2 billion that analysts had been expecting. The company also revealing a new policy that's going to allow GameStop to invest excess cash in stocks. This is interesting. Instead of its previous practice of buying short-term investment-grade fixed income, maybe a way to help boost things on a short-term basis, but that's not something you're going to put a multiple on. And, if you get it wrong, you get it wrong.
If you get it right, why do you if you get it wrong, we'll go wrong? No, it could go both ways,
Meantime, shares of Chewy, they are also falling. The online pet products retailer reporting a loss of about 8 cents per share. That was about 2 cents lower than analysts expected. Revenue also coming in slightly below estimates. Guidance, though, and here's where I think is some of the big impact here.
Chewy. Really? You bring Chewy up? Ryan Cohen is not even in there. Like, what the hell? Two of his company? Ryan Cohen is GameStop, okay? So I know Chewy is his, previous company, but the fact that Chewy went down has nothing to do with Ryan Cohen right now.
For the current quarter falling short, company saying the guidance reflected macroeconomic pressures industry-wide. So I don't know if you think it's, you're saying you think there's a problem with Chewy.
I'm saying I wouldn't know what to do at GameStop. So
I wouldn't know what to do with GameStop because they're in trouble.
I wouldn't know how to run that, but I think I could run Chewy. I mean, why is that down from 45 to 17? People are bonkers.
Well, because it ran up during the pandemic, and
for the
people were using
online
it for the
stuff.
online action of the whole thing.
I would just tell you,
and because people were spending all this time with their pets and adopting new pets. And
you can basically, it's like totally inelastic at the pet stores where I go.
Yeah,
I pay
I will
money
tell
that you would not believe.
Right.
Look, maybe
for
it doesn't make sense to be below it where it was in 20, but people were questioning, should it be at $120 during the pandemic?
Andrew, I buy a freeze-dried chicken thing. It's like this big, but the dogs will eat the kibble if you use this freeze-dried chicken. They're little, and you don't have to use a lot of it. But a bag this big, $85.
This is ridiculous. So it's supposed to be about GameStop earning, but then they don't talk, half of the time they don't talk about GameStop. What the hell? They just only like headlines, miss revenue. Okay. How about beat on earnings? No? How about that? No? These news media do not have any credibility. They're just gross, in the terms of, gross. Okay, what are these? Okay, well, again, they're grouping it up with Chewy here. So what's going on?
Three very different reads on the consumer and on two Ryan Cohen names after the bell today. We're talking Chewy, GameStop, and Dollar General in today's earnings exchange. Here with our trades is Lee Munson. He's Portfolio Wealth Advisors President and CIO. Tip of the hat to you, Lee. Welcome. Let's start with Chewy. Those shares have lost nearly half their value this year. Piper Sandler is warning on softening demand for higher profit margin items and declining prices in pet food. Interesting. JP Morgan, meanwhile, is bullish on revenue from its auto ship subscribers. How would you, Lee?
Really? Sorry. I have to.
If you had to, if you want to, play this stock.
Well, the first thing that I'll do is, this is a trade. In terms of a longer-term investment, I have some problems. Number one is that management is kind of Pavlovianly made analysts only focus on the auto ship numbers. Is it going to be 70? Is it going to be 75%? They're talking about how much sales per customer. That's great, but that's not the real story. They have about 20 million active customers. They did last year and the year before. We're not growing new people. Why am I going to pay 150 PE or whatever? Oh, and next year it might be, 50 or 30. We don't know. Unless this thing can double the amount of people out there, I'm not that interested in. So I think that when you talk about where the option interest is and they're making a big move, this is all about, what's happening right now. I think my problem with Chewy, it's kind of like a chain store that can't open any more branches. And when you look at the last couple of years, sure, revenues are up 30%, but let's be honest, pet food inflation is up 30%. I don't see the growth. I think it's just a trading stock. Nothing wrong with that. My dog loves it, so I have to say that.
You think the pet trade is whimpering out. I get it. I see what's happening there. We'll move along to GameStop.
Hold on. Before we go to GameStop, that makes me want to buy Chewy. Because anytime they're like, oh, it's not a long term, it's probably have some nice upside to that. But I have to look at Chewy as a company before deciding to do that.
Then, which is down nearly 20% this year, but coming off a retail-driven rally at the end of November. Obviously, it's been levitating. Wedbush watching the shift from physical to digital download games and softening holiday demand for other hardware like the Nintendo Switch. Retail investor activity, of course, always a driver of the share price. What do you do with this one, Lee?
I'm going to try to be mature about this meme stock. Let's look at the last 5 years.
Mature? Can you even say mature? Why are you mature? Sorry, I had to.
Our compounded annual growth rate is -7%. Our cost of revenues is going up, not down. So they have got to pay more and more.
What? Really? Huh? Who are you? What?
To make a buck. When you look at the only thing that grows about GameStop over the last couple of years.
Wait. GameStop? You can't even say the name right? What? Who are these people? Like, do they even know what GameStop is? Or they're doing this on purpose to try to mislead people even who are trying to buy into the company. Oh, let me see. GameStop? Did he say GameStop?
Is the collectibles line, meaning that the place where they really do well is selling more Pokemon cards and what are called Funko Pops, which are these little plastic doll things. But when you look at the ads and you look at their website, it's not about consoles, it's not about Fortnite, it's not about Call of Duty, it's about little plastic figurines and trading cards.
That is so misleading, sir. Okay? Well, let me show you. Let me show you. Whoever watched this news. What is this? The first thing you go into the website. What do you see here? Right here. Is this Funko Pop? Huh? These people. Okay, well, there you go, Funko Pop. I mean, he might have a point there, but that's not the first thing you see. So, maybe I should be a little bit more nice to these people when I react to their shenanigan stupidity in trying to pigeonhole GameStop to somewhere that it's not being. But I'm sure most of you guys who watch my show don't watch these people anyway. But on the off chance somebody come to this particular live stream who hate GameStop for some reason or on the fence, how about that? At the very least, take a look at it a little bit more, kind of closely at the very least, okay? And don't just take this guy's word. I know he has a suit on, okay? And well-spoken, much more than I could ever, okay? But you have to kind of check, trust but verify type thing too, right? If you trust this news media and you trust this guy, okay, at least verify what he's trying to say. And I'm telling you, he's wrong. Just based on the facts alone. Like, just go to the website and you'll see that they're promoting games, not Funko Pop, instead of console. There you go. First thing that you could get, right there, console. In the middle, okay? Right there, PC, console. It's like, what? This guy. Gross.
Everything else is going down with this ship. They even, did they even get a COVID bump with all that stimulus money? No, they couldn't even do that right. So I don't have a lot of faith in this company. I'm not saying you should go short it because, again, it's I would walk backwards and walk far, far away and find another company to buy.
All right.
Ooh, that is dark. Just slowly back off. Don't touch this company because my boss might lose a lot of money.
You're doing the moonwalk away from that one, maybe to Dollar General, which is down more than 40% this year, but off of the October lows when CEO...
Of course they promote Dollar General. And look at his mug face. It's like, yes, go to Dollar General.
Jeff Owen was ousted after less than a year. KeyBank is watching for consumer trade down to the discounters and big competition from Dollar Tree and Walmart. They're bullish on the return of Ted Vassos as CEO, though, hoping he can address the sales decline and store safety concerns. Is this a chance to pick up the shares?
I think so. I love this thing at
Of course you would want that because, my boss is into this one. Of course, I'm gonna promote that one.
100 right before Vassos came back. It's run up a little bit. Let me just tell you, I kind of regret I didn't just jump in a little bit earlier a few months ago. But here's the thing.
Oh, man. It's still good, though. Go ahead and buy into it.
They'll get the inventories down. I love the pop shelf stores. They got about, I think, 300 or 400 of those out. They look cool. It's more about little goods and little things to buy. I think people don't understand this company. It's a tough business. However, the PE is so cheap compared to its other competitors. Also, they've got the new, CEO back that's making people feel comfortable. But this is not something that has a moat. This is like the only game in town. I live in New Mexico. We have a lot of rural areas where a lot of people don't have gas money to drive 25 miles to a Walmart. They got $3 in their pocket and they need some things like toothpaste and necessities. And Dollar General provides that. So I think that people don't understand that as long as they can make the stores a little safer, that's an issue.
All right, we got to go. Any parting thought on Disney? You warming up to it at all?
Whatever. Okay, so back away slowly from GameStop. GameStop only promote Funko Pop, which is not true. what else did he say? GameStop, the fact that he misnamed GameStop. I don't know if that's intentional, but it feels like intentional because you are on new channels here, okay? You're not supposed to be making that type of mistake. Either you don't know what you're talking about, you don't even know what GameStop is. That's why you keep calling it GameStop. It's like, really? They're bringing people like that to steer you away from GameStop. And look at his demeanor too. He's very good at kind of like what is it, like the tone, And these news media people are master at it, because they're practiced. They're just actor, okay? They're just acting like they're not into GameStop because they're of whatever reason. Maybe they have real hatred for GameStop, perhaps. But we know what this channel is. This CNBC has always been negative about GameStop. Okay? And it's unfounded. Again, it's till this day, there's still the same freaking narrative. Same one. But anyway, that's that. That was like a doozy. All right, so I'm gonna kind of end it here for now, but let me show you something here first before I end it here. And thank you so much for joining, you guys. Appreciate you, all of you. I know most of you guys gonna watch it back later. Most of the view comes from after I post it already. So I appreciate the Jay and Lynn, Lionel, and many other who just joined. Just one more, 5 people. I appreciate you. But anyway, so let's look at the short interest. Now I'm interested in like how much shares have they short, every single day, right? So it surprised me that today was kind of low. Now, does that mean they don't have enough shares to short, or they're just too scared to short it even more, or not? But the volume today, if you look at the total volume being traded right there, is 13.2 million shares being traded, and 40% of them. This is the first time ever that I see it at less than 50%. The first day ever, right? So does it mean they're scared now to short it more? Just like that guy was saying, like, I wouldn't short it, but I wouldn't buy it either. Do not buy it, that type of thing. So, but even then, though, the amount of shares being shorted, it's still in the millions, off exchange right here, off exchange exempt. So exempt meaning that they're not accounted to, reg show and all that stuff. There's some financial term that is to do with, the bona fide market makers and all that stuff. So if you're not well versed, I'm not the person to explain it well because, it's kind of complicated. Even I couldn't even grasp the concept of what, when you buy your shares, where does it go, and it's very opaque in that sense. So they have these tools that the market maker use to short this. I bet you anything, all of these are naked short, so to speak. They seem to have more shares to do that with. They are allowed to create this amount, this type of volume, to inflate the float of inflate the volume? No. They create that shares out of thin air in order to short it, but they only have a certain number to go by, so to speak. So that's why. I hope that makes sense. Probably doesn't, but who cares? GameStop is doing good, so. Sorry, you guys. I'm kind of hyper, but not really. It's just like, when you're so happy with the investment that you have, even though you're down like in the negative, but I hadn't sell, so it's like it's not really lost or anything. But yeah, I'm that secure because again, this is a long-term thing for me, and I have 30 years to cash out of my investment, so it's a lifetime for me type thing. Like, well, not a lifetime, of course. Eventually I'm gonna sell, right? But not at this point. It makes no sense to sell it at what, set 16 right now, ridiculous. All right, back to what I was gonna show you guys right here. So let's see. Yeah, so this is the first day ever that I see that it is in 50% or less than 50%. So is that a sign that they're finally scared of GameStop being more profitable, being more and more lean, operating at a very reasonable growth point until now, up until then? But yeah, if you look at this particular website, failed to deliver. Now, this used to be big. I mean, it really doesn't do much lately because failed to deliver hasn't been accumulated that much, and with the exception of a few days here and there where perhaps the volume is just so high that they have to do a massive amount of fails to deliver. It used to be in the millions right here. 1.6 million shares up here. So there you go. Yeah, it's suspicious to say the least that it's low. But is that an indication, or to me that means that they are scared finally that GameStop is going to post more profit, and they're trying, with that whole new segment right there, telling you to back away slowly from buying GameStop. So if you believe that, good on you. But I would encourage you to at least look into the actual number of things, right? Any analyst that tells you to sell at this price point is irresponsible, number one. Number two, perhaps just downright evil, okay? Because they're trying to mislead you. So just at least check. That's all I'm asking. Yeah. All right, guys. I am kind of thirsty, and it's already been an hour or more. Again, thank you so much for coming and joining. Thank you, Jay, for your insight. It was amazing. Thank you so much. And I will see you later.